Today in this video, we're going to talk about mortgages. Which one is best for you? What's the difference between the two? What's going on? How do I decide? What do I do? Hi, my name is Kristen Nagy. I'm a local realtor in the Niagara region. So if you're considering buying or selling property, go ahead and give me a call. Or if you know anybody who's looking to buy or sell, go ahead and pass along my name, and I'm happy to help anybody. If they have any questions about the real estate market, give me a shout. In this video today, I want to talk about the different types of mortgages that are available in Canada. Today, we're only going to talk about the two primary types. There are a number of different products out there. It's very important to speak with your financial advisor or your financial institution on which product or service is best for you. But today, we're going to talk about fixed and variable rates. So whether you're looking to purchase a property or refinance your property, stay tuned. This is definitely for you. So which one to choose? There are a number of options. There's a number of different products. Go ahead and examine each of them and make sure you check to see with each of the different banks on what they offer, what you get, what the terms are, what your conditions are. And the other thing to consider too is the penalty. So say you're saying to yourself, okay, you know what? I don't really know how long I'm going to be in this home. I think, you know what? We're probably going to end up having to relocate out of province to a different area, whatever it is, in, I don't know, say 2 years. You then may want to entertain a shorter term instead of a 5-year, do a 3-year, because what will happen is, say you decide to sell the property between now and whenever your term is up, 2, 3, 4, 5 years, when you have to renegotiate your mortgage, you will see a penalty. And so by choosing a shorter term, if for whatever reason you need to break your mortgage at any point, your penalty should be less than it would be on a 5-year term. So that's very important to have that conversation with the bank on what your plans are, what kind of terms are out there, and what the best options are. Make sure you stay till the end, because I have one extra helpful bonus tip that many people don't consider. Okay, so let's talk fixed versus variable. The fixed rate is, okay, you know what, you've signed up for 4.54, whatever your number is. You know for the entire term of your mortgage, whether it's 3, 4, 5 years, your interest rate will be 4.5 the entire time. It won't fluctuate up and down with the Bank of Canada rate. With a variable rate, you'll go ahead and secure at perhaps a lower rate, 3.99, or whatever the current rate is. It's tied to the Bank of Canada rate, so it will fluctuate. And depending on the way that your mortgage is set up, you may see your payments then fluctuate, or it will just fluctuate on the back end and your payment will remain the same. So at the end of the day, you have to decide, okay, you know what? How much risk do I want to take? Am I locked in, or am I 65 years old looking to retire? You know what? I may not want to take as much risk as, say, I'm a first-time home buyer. I'm in my 20s. I have 20 years to pay off my mortgage, or whatever your conditions are with your mortgage, that, you know what, you may be willing to take that little bit of extra risk. At the end of the day, you need to sit down with your financial advisor and they will help you form the best plan for yourself. At the end of it, it's going to be your conversation with your financial advisor on what is the best plan for you and your finances going forward. Never feel pressured. Do your research, compare all the big banks, whatever lender you choose, whether you choose a mortgage center or a big bank, go ahead and examine everything. Take a look at the rates, take a look at the terms, and most importantly, take a look at those cancellation policies. The reason for that is anything can change at any time. You could get a divorce and all of a sudden need to sell the home. Maybe there's a job loss, you need to sell the home. So it's very important to go ahead and determine what you financially can afford and the risks that are associated with it. And lastly, for my bonus tip, thank you for staying all the way to the end, is a lot of people don't realize is quite often a lot of the big banks will actually price match their rates to other big banks because they want your business. So go ahead and do your research, see who is offering what, and go ahead and price match them and see if they will give you a lower rate or whatever your competition is. Worst thing will happen is your financial advisor will say no, but maybe they'll say yes. And then you save some money. And everybody in this market loves to save some money. So if you're thinking about buying or selling in the Niagara region, go ahead and give me a shout. My name is Kristen Nagy. It's 289-228-8468. Once again, that's 289-228-8468. Bye for now.